Hi traders, Nathan.bray here from ACY Securities. Well, we're coming to the end of a week. It's casual Friday here in the office, so I want to do a quick wrap up of where we're at in the market and then go on and look at some of the key levels in our Telegram feed, our live interactive trading feed that have been sent out to take advantage of this direction in the market. So first of all, fundamentally, we are seeing some positive data coming out of the US, whether it be the non-foreign payroll, blitzed the forecast, followed by the Fed saying the economy is looking okay and we're going to continue this hawkish stance. We've got our 10-year yield on the US continuing to remain stable, which is important, but also starting to rise. Now, this all comes off the back of a key technical level on the US dollar index that we've been pointing out over the last couple of months. So we had a big correction in this US dollar over the last few months, but it got down to that previous level of major resistance at 101.20, and that started to become support. Now, at that point there, a couple of weeks ago, we're looking at that and saying, yes, it's had a big correction, but unless that level is broken, then the longer term trend is still in play. That being said, are there trading opportunities then trading along this US dollar? So the opportunities that we were sending out to people were, in our opinion, the best technically looking opportunities. So I'll run through a couple of them for you right now. First of all, let's look at the pound dollar. Now, this pound dollar went up and double topped on a weekly chart at 124.47. So at that particular level, we were looking for a failure, and a failure we got. Then it started to break down using price action. It broke down below previous bottoms and then failed underneath them. So one of those on the daily chart, the next level we were looking to trade off was that 122.63. and then the 122 handle, and this week the 121 handle. So all of those key areas, for various different reasons, have been broadcast out, and to be honest, they have been working really well because we got the macro, both technical and fundamental picture right to start with, and these levels are really how we try and take advantage of it as a trader, looking for longer moves down and shorter amount of risk because we're honing in on these key levels. Let's take a quick look at the New Zealand US dollar. So New Zealand US dollar, we're looking at major double top resistance there that it took a while for it to eventually fail, but at 65.30, you can see it right there. We got another failure in line with the longer term trend after getting a major fib retracement level. It's all starting to look pretty similar, isn't it? And between the pound dollar and the New Zealand dollar, they were easily the best looking opportunities technically, and they're the ones that will broadcast out to you on the Telegram feed. Now look at the Aussie. If we look at the Aussie, we saw a major weekly double top in line with the longer term trend, having some fundamental insight that we could see some strength in this US dollar. So we've got three confluences of reasons why we're looking at these levels. Now the level on the Aussie was 71.30, and then it failed there, and now we saw it pull back up, and we were looking at a failure at around that 70 handle, and we've got that a couple of times this week where price is really starting to move down. And only last week, to wrap it up, last week, we were looking at the fact that if the Fed is going to become more hawkish, which they say they're going to do, they're going to raise rates now a little bit more aggressively above where their original plan was, okay? And we see that the 10-year yield is really stable. Those things in place are potentially very bad, okay, for stocks, which we pointed out. The minutes have come out, that's happened this week. And what we saw on a technical level to start with was massive retracement levels in line with the correction on a weekly chart. So when we look at the Dow Jones, the 30, okay, we saw the Dow Jones up around 34,350 all the reasons were explained in a video I did last week. A massive correction, a big failure up at that level, helped of course by the fact that interest rates from the Fed are potentially going to become higher, and we started to see that 10-year yield, which I talked about, becoming more attractive and starting to be stable and rising. The other was the S&P 500. So looking at the S&P 500, we were looking at a very similar level, a 62 fib retracement on a weekly chart, going in line with the downtrend up around 4,150, and we have seen cracking profit fail at that particular level. So folks, if you would like to get access and get this information coming out to you live, by all means, my email is in the description below. Email me, tell me you would like to subscribe to our live interactive trading feed on Telegram, and or please, there's free webinars with live analysis by our own senior market strategist Duncan Cooper. Feel free to register yourself in those webinars, ask questions live from Duncan, and most of all, have yourselves a great weekend.